Hi, it's Bruce Woodburn at CrossCountry Mortgage, WDBO Radio and WFLA Radio. And today is December the 11th, and these are the three big things you need to know. But before I get into the three big things you need to know, I want to talk a little bit about the health of the real estate market. Because ultimately, if no matter what industry you're in, with the exception of healthcare and government, really the health of the real estate market is a direct reflection on your own industry. So it doesn't matter if you're selling cars, if you're a plumber, you're an electrician, if you're an engineer. If the real estate market is sluggish, everybody else's market tends to be sluggish as well. Right now, we've got a very healthy market. And part of that is stimulated by low interest rates. So quite frankly, I think that if you know anybody that's considering buying or refinancing, it's a really good time to check with me right away. If you have an interest rate above 4%, above 4.25%, it's time to evaluate it and see if refinancing might be the best thing for you to do, or a friend or family member. I promise I'll take really, really good care of them, and I'd be honored for you to entrust me to help your friends or family with a refinance or a purchase transaction. I'm here for them, and I promise I'll always give honest advice as to what the right thing to do is. And as a direct lender, you just can't beat my rates and terms. So I'd be honored to be there for you and your family if that's what you'd like to do. But the real estate market is really healthy. So here's the three big things you need to know. I'm really excited about this. So it's been a long time since I've seen the opportunity for somebody to get a bridge loan. So we're going to talk a little bit about bridge loans. A bridge loan means that I own a property right now. I've got tons of equity in that property, but I want to buy another home, but I don't want to sell the home I'm in until I've got, until I've closed on the new one. But I need the money out of the one I already have. How do I get that money out? Bridge loan. I have not seen a bridge loan in over 15 years. I got these great bridge loans right now that if you're interested and you need to tap into that equity, then let's go through the opportunities for you to be able to pull the equity out of that current home, buy the new home, then sell the other home. Then we'll do what's called a recast or a principal reduction on the one you just bought, so that your payments are now reflective of the down payment that you put down post-closing. So you bought the home, let's just say you bought the new one with 5% down, but you're sitting on a whack of money on the one you sold. Now you sold it and you want to reduce the payment on the new one. I can do what's called a recast. Call me about recasting, call me about bridge loans. Second thing is that you need to know, home equity line of credit. They were really pretty much cut off during COVID, but now there's an opportunity, and I've got some really cool home equity lines of credit available if that's what would work best for you. Now, I like personally doing the full refinance to get the whole loan down, but if you've already got a loan that's really attractive, I'm not going to try to convince you to refinance a great loan. That would be ridiculous and it would be self-serving. So let's look at how can we maybe pull out some equity to consolidate some debt if that works for you. So that's the second big thing you need to know, which, oh, by the way, I don't know anybody that has this, but I do. I do have home equity lines of credit available on investment properties. Unheard of. But you can call me if you have a need for that as well. All right, and the third big thing you need to know is we are approaching the end of the year quite quickly here, and it's soon going to be time for tax season. I know that's kind of painful for a lot of you, but if you're self-employed and you're considering buying or refinancing a home in the near future, and you go ahead and file your tax returns, and your tax returns, you wrote off everything, you're not showing any money, you think that that's the creative thing to do because you have this quote unquote really good CPA. I know what that means. It means you're not showing any income, and it means you're not going to qualify for conventional financing. You're just not going to, because you write everything off. So if you would like me to evaluate your taxes before you file, I will do that for you. You just call me and let me know, set an appointment. I'll evaluate your taxes, and I'll tell you what you need to show in order to qualify for what you want in 2021, whether it's a refinance or a purchase transaction. So many of you file, and then you call me and you start the conversation off like, well, Bruce, I'm just going to tell you right off the bat, I have a really creative accountant. All that means is you're not showing any income, and you're going to pay a higher rate of interest because you didn't. And if that's what you want to do, well, I have loans to accommodate that. I do have loans for you that don't want to pay the government any money. I don't care. I'm a no judgment guy. I don't care what you do. But if you don't want to pay the taxes, I have a program that's a bank statement program only. I don't even want to see your tax returns. If that's what you want, I have that program. If you want the very best interest rates that are available, then you got to show me the money, and you got to show the IRS the money, no matter how you cut it. Those are the three big things you need to know. Bruce Woodburn, CrossCountry Mortgage, 31 years in the business. I'm dying to help you and your family get through the next purchase transaction or refinance transaction, and I can assure you, you'll always get professional and honest advice from my team and I here at CrossCountry Mortgage. You have an amazing holiday season, and I hope to hear back from you real soon. Thank you very much. Have a great day.